The IMF approves its $3 billion loan for Egypt, and the Olam Group is planning a dual listing in Singapore and Saudi. You're watching The Daily Brief with Forbes. I'm Ramia Faraj. The IMF has approved a $3 billion 46-month loan to Egypt under the Extended Fund Facility for Egypt. The IMF says its program for Egypt will preserve macroeconomic stability, restore buffers, and facilitate inclusive and private sector-led growth. The package includes a shift to a flexible exchange rate regime, a monetary policy aimed at gradually reducing inflation, and fiscal consolidation to ensure a downward public debt trajectory. The FF is expected to catalyze additional financing from Egypt's international and regional partners. Meanwhile, Egyptian annual urban consumer inflation in December rose to 21.3% from 18.7% in November, exceeding analyst expectations. Official data reveals the inflation figure was the highest since December 2017, when it hit 21.9%. The central bank allowed the Egyptian pound to depreciate by about 14.5% in October and let its value continue to weaken slowly and incrementally in November and December. Olam Group, a Singapore-based food and agribusiness giant, says it plans to list its group firm Alum Agri Holdings in the domestic bourse in the first half of this year. The group is also planning a concurrent listing in Saudi Arabia. Meanwhile, the group plans to demerge Olam Food Ingredients on a sequential basis after the IPO. The size of Olam Agri Holding IPO will be up to $1 billion. The company has appointed Rothschild & Co Singapore as its financial advisor for the proposed spin-off listings. Invescorp says it's planning to invest up to $1 billion in the GCC real estate market over the next 5 years. This follows Invescorp's first real estate acquisition in Saudi Arabia in a 215,000 square foot temperature-controlled warehouse in Dammam. Invescorp says the acquisition leverages its global experience investing in the logistics sector, particularly in the U.S., Europe, and India. It says this is the first in a series of investments it's planning to make in the near future. Alibaba has signed a cooperation agreement with the government of Hangzhou, the city where the company is headquartered. At the signing event, local authorities formulated specific measures to help develop the online platform economy. The signing comes just 2 days after Ant Group, the finance company long affiliated with Alibaba, announced its billionaire co-founder and head Jack Ma had ceded control of the company. Investors interpreted the move as an end to a years-long regulatory crackdown on the Chinese tech industry. To Russia, where the Energy Ministry says it's working on additional measures to limit discounts to international benchmarks on Russian oil prices after the West imposed price caps. President Putin last month signed a decree that banned the supply of crude oil and oil products to nations that abide by the cap for 5 months starting in February. Russia is the world's second largest oil exporter after Saudi, with oil and gas sales accounting for almost half of its state budget revenue. Let's take a look now at today's Forbes Real-Time Billionaires ranking. It tracks the daily ups and downs of the world's richest people. Our biggest winner today is Elon Musk, up $4.3 billion with net wealth of $144.4 billion. Our second biggest winner is battery mogul Robin Zhang, up $1.3 billion with net wealth of $36.1 billion. And our third place winner is Jeff Bezos, up $1.3 billion with net wealth of $110.6 billion. Check out our website and social media for the latest Billionaires news. I'm Ramia Faraj. This is The Daily Brief. Thanks for watching. See you tomorrow.